Hello and welcome to today's video. Today we're going to talk about the unprecedented raise in GameStop stock price. Now my goal for this video is going to be keeping the explanation as simple as I possibly can. There will be nuances that I will exclude, and that's okay. The goal of this video is purely simplicity. Before we start, I just want to throw a disclaimer that I am not a financial professional. These are just my understandings of the events that have occurred. Don't take any advice from this video when it comes to buying and selling stocks. Always do your research first. One last thing before we start, don't forget to like and subscribe. That being said, let's jump on in. Okay, before we go any further, there's a couple things we need to level set on. First one being, stock prices are based on both supply and demand. If there's high demand and low supply, the price will be high. So keep that in mind as we go through. Now that we have that down, the second thing we need to know is what a short seller is. So I have an example for you right here. So essentially a short seller is someone who will borrow stock and then sell it to the market. Then after a certain duration of time, the short seller is obligated to buy that stock back from the market and return it to the party they initially borrowed it from. So essentially the short seller is hoping to take that borrowed stock, sell it at a higher price, buy it back later from the market at a lower price before they return it to the initial party they borrowed it from. It's because of this design and this type of transaction that the short seller is hoping that the stock price will go lower. Okay, now that we have those two fundamental things down, let's dive into what exactly happened. So it looks like users from the Reddit website saw that this stock was heavily shorted. And remember, that means at some point, those who are short of the stock need to buy the stock back from the market to give it to the party they initially borrowed it from. So what the Reddit users did is they went in and they bought the stock, which increased the price. Now, these short sellers who needed to return the stock at some point saw this price increase. And remember, their goal is to buy the stock as low as they could. So they went in and tried to buy the stock back when it was high before it got any higher. What this ended up doing is, as we showed in that economics section earlier, increased the demand for the stock but did not increase the supply. Because of this, the price got higher. Then what ends up happening is this price increase gets the attention of more short sellers. Again, remember, they want to buy the stock at the lowest price they can before they give it back to the party they borrowed it from. So they'll see it increasing and then they'll try to buy the stock because they're afraid it will increase more. What ends up happening though is you get this snowball effect where more and more of the short sellers try to buy the stock. And this increase in demand just makes the stock price shoot through the roof, regardless of the actual fundamentals of the company itself. Hope you enjoyed this video. Don't forget to hit the like button and make sure to subscribe. There's a bunch of videos on my channel about economics and finance. Go ahead and check them out.